This is Nightly Business Report with Bill Griffith and Sue Herrera.
Snapback. Stocks rebound from yesterday's losses as the wild ups and downs of the market continue.
Bungled Brexit. British lawmakers vote to delay leaving the EU again. Why investors need to care about what's going on across the pond.
And branchless banks. How digital startups are taking on the big banks and grabbing valuable customers in the process. All of these stories and much more tonight on Nightly Business Report for this Wednesday, September 4th.
And we do bid you a good evening, everybody, and welcome. Cat Stevens called it a wild world, and that's what investors have been focused on these days. Today, they look to areas where global risks have been key, places like Hong Kong and the UK. We'll have more on those in a moment. But in the end, they felt it was safe to wade back into the markets after yesterday's sell-off, and stocks rose, recovering most of yesterday's losses, with the Dow up 237 points, NASDAQ climbed by 102, the S&P added 31. Seema Modi starts us off from the New York Stock Exchange.
U.S. stocks rallied following easing tensions in Hong Kong, plus data out of the Fed Beige Book. Markets in Asia rebounding after Hong Kong's Carrie Lam withdrew the controversial extradition bill that has sparked months of protests. Separately, activity in China's services sector picked up slightly in the month of August. While one data point doesn't make a trend, economists say it is an encouraging sign at the moment. Dow closing up triple digits, erasing yesterday's losses. Comcast, Pepsi, even Coca-Cola hitting new highs in today's trading session. A rebound in oil prices added to the positive tone on Wall Street. WTI crude closed up by more than 4% after new U.S. sanctions were imposed on Iran. But traders are still concerned about the longer-term risk of a larger trade war and tariffs eating into corporate profits. Investors will be now watching for the August ADP number out tomorrow morning, which will give a first look at the monthly jobs report. For Nightly Business Report, Seema Modi.
In its Beige Book, the Federal Reserve found the economy growing at a modest pace. A weak spot was manufacturing, and that's just the latest finding out of the industrial sector. Steve Leisman tells us what it all means.
The latest data show the nation's industrial sector is shrinking, and that's raising concerns about whether consumers can hold up the U.S. economy.
But everything that we see says the consumer is in good shape. Where it might get tough when companies begin to pass through the impacts of tariffs into end consumer prices. We haven't seen that wholesale yet. That could begin to have an impact on consumer sentiment, but that's not a projection.
So what's behind the factory slowdown? Experts cite several factors. First, they say, is the trade uncertainty out there with the trade war between China and the U.S. Overall, there's global economic weakness, specifically in manufacturing sectors. Factories have trouble finding enough workers, and also the dollar is strong, making U.S. exports more expensive relative to their foreign competitors. Chad Moutre, chief economist of the National Association of Manufacturers, says the manufacturing sector is contracting right now in large part because of slowing global growth and uncertainty on the trade front. What manufacturers need most now is more clarity on trade. Another possible factor, the slowdown in Boeing plane production from the issues surrounding the 737 MAX. It's unclear how that could be impacting the national data, and it's unlikely that it's only just domestic issues affecting the U.S. Moutre from NAM says by his count, manufacturing is shrinking in 11 of 20 countries that are major export markets for the U.S. That list includes Canada, Mexico, and Germany. What economists can't know is how much of this was happening anyway and how much can and should be linked to the trade war. For Nightly Business Report, I'm Steve Leisman.
In London, it was another day of high drama as British lawmakers voted to once again delay that country's exit from the European Union. The move is a blow to the nation's new prime minister, and it cuts the chances of a Brexit without an economic deal in place. Villa Marks is in London for us tonight.
Order! It's a now increasingly familiar but still painful tableau for the new British Prime Minister.
The ayes to the right, 329. The noes to the left, 300.
2 days of parliamentary confrontation for Boris Johnson.
So the ayes have it, the ayes have it.
5 separate votes and 5 defeats for his government that's in power but not really in control. Last week, Johnson had pushed to suspend Parliament, and now, for the second day running, Parliament has pushed back. Opposition lawmakers like Labour Party leader Jeremy Corbyn have been successful so far in their efforts to preclude the possibility next month of a no-deal Brexit. It's an outcome the Bank of England, corporate leaders and the country's finance ministers, past and present, acknowledge could prove costly for the UK economy.
And I understand that the uncertainty around Brexit is challenging, but this is ultimately a question in trust in our democracy. In the end, a strong economy can only be built on the foundation of a successful democracy.
The Prime Minister has long insisted he must retain the option to exit the EU without a negotiated settlement, so that economically frightening possibility might force his European counterparts to offer fresh concessions in a new Brexit deal. But as his own government has so far refused to publish details of how bad a disorderly departure would be for the UK, his opponents here in Westminster have sought to deny him that negotiating tool. And as of right now, since he's lost his parliamentary majority, they can also deny him the power to call a fresh election.
Mr. Jeremy Corbyn.
They have loudly and repeatedly insisted they will not allow a new national election until the current legislation to block no deal has become legally binding.
Let this bill pass and gain royal assent, then we will back an election so we do not crash out with a no-deal exit from the European Union.
Based on the existing parliamentary schedule, that means an election could be called early next week, to take place midway through next month. Critics say Johnson would campaign on a promise to make Brexit still happen by Halloween, but he'd need to frighten a new parliament into supporting his high-risk approach, as this one no longer seems scared. For Nightly Business Report, I'm Willem Marks in London.
Bill Stone joins us now to talk more about this latest move to delay Britain's exit from the European Union and what could it mean for the U.S. and U.S. investors. He is the Chief Investment Officer at Avalon Investment and Advisory. Bill, nice to have you with us tonight. Welcome.
Thanks.
Certainly, this is still unfolding, and there are many more steps that have to take place. But it seems to me that simply increases the uncertainty for global markets.
Well, I guess the good news is it does help in one aspect. It makes it less likely, because of the votes that were taken today, that Britain leaves without a deal. So, probably still leaves, but seems more likely that we end up with a deal ahead, which, all the things being equal, does make for actually less uncertainty, and we're seeing some of that reflected in the financial markets.
Alan Greenspan today said something he's said before, but he said it's only a matter of time before the U.S. sees negative interest rates like they are seeing in parts of the European Union, especially in Germany. Depending on how Brexit goes here, do you think that's inevitable, depending on how things go?
Yeah, I would disagree. I don't think it's necessarily inevitable. I view Brexit as just another, geopolitical risk sitting out there. We don't really know how bad it would get or what the, major implications would be if, in fact, they crashed out of the European Union without a deal. We just know it's probably not a good thing. And even them just sitting out there and us not knowing is bad enough, because you think about it, what corporation is going to make a big decision to, say, build a big new plant in the UK without knowing really, who they'll be able to trade with and what it'll cost and those kind of things? Those all weigh on people. It's the same thing we talk about with the kind of costs that sit there with the tariffs between the US and China.
So does that make our market more attractive relative to not only the UK, but as Italy tries to form its new government and other parts of the EU, as Bill mentioned, Germany with negative rates? Does that make the US market more attractive to you?
On some aspect, yes, because certainly, when you look at the global economy, the US, while slowing, is still looking good, really, I have to say. Probably still grow, somewhere around 2% for 2019 in terms of GDP. And yes, we're slowing into it, but the consumer still remains resilient. So corporations obviously benefit from that. All the uncertainty in Europe and the fact that Europe is much more exposed to some of the slowdown in China does make our companies, again, if you think about the more domestically oriented companies, more attractive. But that being said, obviously, there's a lot of companies even in Europe that do a lot of business in the U.S., so you can't completely throw out Europe.
And on that note, Bill Stone, thank you very much. Bill is with Avalon Investment and Advisory.
The Federal Trade Commission today issued a record fine against Google's YouTube site to settle allegations that it collected children's data without parents' consent. Yilan Mui has the story.
Google will pay regulators $170 million to settle accusations that YouTube repeatedly violated the law that protects children's privacy online. Under the agreement, Google will pay $136 million to the FTC and $34 million to the New York Attorney General's office. In addition, YouTube must set up a system for content creators to designate their videos as designed for kids. The FTC said this is the first time any platform has been required to do that, and that it will conduct sweeps to ensure compliance.
This case sends strong messages to third parties like YouTube, channel owners, and the business community as a whole. For YouTube and other third parties like it that serve ads, they can't market their ability to get child viewers on the one hand and disavow knowledge that children are using their service on the other.
In a statement, YouTube's CEO said responsibility is the company's #1 priority. Starting in 4 months, YouTube will assume any user watching kids' content is actually a child. That means getting rid of targeted, personalized ads and disabling features like comments and notifications. However, the 2 Democratic commissioners at the FTC voted against this settlement. They argue the dollar amount is too low. It should have been in the billions, not the millions. It doesn't do enough to change YouTube's practices, and the commitments from Google cannot be easily enforced. Meanwhile, consumer advocates worry that YouTube's business model of making money by advertising to kids remains intact.
We need to see if they move all of that children's content off of the main YouTube site, or if they're just putting it also as well on the YouTube Kids app. Because as long as that content is still on the main YouTube site, children are going to have their data collected, they're going to get inappropriate links, they're going to have inappropriate content.
Still, the FTC pointed out that Google's $170 million penalty is the largest ever collected under the privacy law. For Nightly Business Report, I'm Ilan Mui in Washington.
So what are the implications of that fine by the FTC? Julia Borston takes a look.
Today, I am pleased to announce that Google and YouTube have agreed to pay $170 million.
YouTube CEO Susan Wojcicki writing that the FTC settlement marks a big change. Quote, today's changes will allow us to better protect kids and families on YouTube, and this is just the beginning. We'll continue working with lawmakers. YouTube will stop collecting data from kids unless their parents allow it, limiting personalized ads on kids' content. YouTube will use technology to identify videos targeting kids, to identify those that creators don't flag themselves. Dissenting commissioners say this doesn't go far enough. Analysts say it will improve the platform over time.
Young kids continue to flock to this platform regardless of what happened. We think ultimately going forward, the compliance oversight will actually make it a safer platform and actually probably bring more people into the system knowing that this issue broke and that they're under scrutiny. So in some ways it can actually be a modest tailwind.
Wojcicki is also making a big push to shift parents over to YouTube Kids, for which they're launching a $100 million content fund. And analysts say the FTC's action, both the fine and the restrictions, won't have any impact on YouTube's parent companies, Google and Alphabet, which are so big that $170 million is just a rounding error.
YouTube's a juggernaut. This is a very minor headwind. We think ultimately it's going to pass quickly. Advertisers did pull back a little bit earlier in the year, and we think that they'll resume spend on the platform. We think Google has full control of the situation now, and that ultimately this will be a speed bump.
The question now is whether content creators shy away from YouTube, because these changes will limit how much they can earn from videos targeting kids. We'll see how much YouTube's investment in original kids content itself counters declining ad revenue. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Up next, can the consumer keep the economy afloat? You'll hear what some of the top retail CEOs think.
Some of the themes this year have been the strength and resilience of the American consumer and how retailers would fare with those new tariffs. Some of the nation's biggest retail CEOs got together today in New York to discuss, and Courtney Reagan was there.
Despite fears of recession and the uncertainty around tariffs, most CEOs here at the Goldman Sachs Global Retailing Conference in New York City agree that the U.S. consumer is strong for now. Lowe's CEO Marvin Ellison says the broader macro environment supports home improvement spending, and not just for things that homeowners have to fix when there's an issue, like a leaky roof, but even in its more discretionary categories, items like patio furniture.
We feel very confident that those discretionary categories are holding up really well to levels that give us confidence that the consumer feels good about their economic situation.
Also today, Tapestry, Coach and Kate Spade parent company, announced longtime board member J.D. Zeitlin is taking over as CEO. I spoke to him briefly by phone. He said the U.S. consumer is still quite strong, despite the company struggling to grow sales recently. Tariffs, of course, are a big uncertainty for retailers, especially if the overall effect crimps consumer spending and confidence.
There's two books out there, right? Higher costs passed on the consumer. Does that mean more rents coming in for the landlords and more royalties coming in for us because revenue will be higher? Or does that mean less shopping and revenue is lower? I think it's too early to tell.
Well, it's been a lot of hard work and taken a lot of negotiation. A number of retailers have figured out ways to mitigate the tariff impact.
What we're seeing is a relatively small percentage of our products are facing price increases from the vendors as they've been able to negotiate better deals or they're absorbing some of it.
Williams-Sonoma CEO Laura Albers said it has a number of mitigation strategies in place, but where it has raised prices, it's shown the retailer may have more pricing power than it realized. So while the U.S. consumer is strong, the uncertainty that comes with the tariff policy makes the future very hard to forecast. For Nightly Business Report, I'm Courtney Reagan in New York City.
JetBlue comes down on its guidance, and that's where we begin tonight's market focus, with the airline cutting its revenue forecast due to weaker than expected demand for its flights, light bookings to Puerto Rico, and of course the impact of Hurricane Dorian. Shares slid more than 4% today to $16.39. Truck and automotive engine maker Navistar beat estimates thanks to an increase in demand for its North American trucks and buses and related parts. The company did, however, say it anticipates fewer truck orders next year as the freight industry weakens. Shares rose more than 13%, though, today to $24.78. And women's handbag maker Vera Bradley missed on its earnings, but it did post a revenue beat after what the CEO called a challenging retail environment. The company was also affected by higher shipping costs and by tariffs. Shares fell more than 19% today to $8.56.
Arts and crafts retailer Michaels painted a solid quarter, topping analysts' expectations. The company saw a spike in its comparable store sales to help combat the closure of its Pat Catan stores. Shares jumped about 12% to just about $6.26. American Eagle Outfitters said a later start to the back-to-school shopping season, along with unseasonable weather, led to same-store sales growth that missed analysts' expectations. Shares fell more than 11% to $14.38. And after the bell, workplace chat app Slack reported its first earnings report since going public, topping revenue estimates and seeing growth in its paid customer use. But Slack saw increased competition in the industry from Microsoft, and it gave weak guidance. That caused the shares to be volatile in after-hours trading, but they did close the regular session up 8% to $31.07.
So-called challenger banks. These are the digital banking startups. They are all the rage for venture capitalists right now. In fact, with VC money pouring in, these banks are the fastest growing part of the financial technology sector. They are attracting the millennial and Gen Z demographic, which are highly coveted by the traditional big banks, and they're doing it all without a single branch. Deirdre Bosa has more.
Challenger banks are still a new concept for many.
Do you know what a challenger bank is?
No, I do not.
I don't know.
I'm not familiar with the challenger bank.
I don't know. That's a string that I don't know.
Never heard of it.
They're alternative banks with fee-free online checking accounts. Chime, one of the biggest digital-only banks, is adding more customers each month than Wells Fargo and Citibank. and it doesn't have a single physical branch.
Actually going into a bank branch and getting a lollipop and asking about the weather and knowing that same person that you've seen for decades is something that is more likely my mom to do rather than my son.
Branchless banks are taking on Wall Street stalwarts by capturing a younger demographic that have grown up with smartphones.
The ability to access information quickly, make transactions quickly, especially if you're a business owner that needs to make quick transactions.
Yeah, I use Bank Online or Bank of America, check my transactions and all that.
I noticed that things are faster, checks clear faster. You're able to access funds sooner.
Big traditional players are also moving in to mixed success. Goldman Sachs launched its online consumer bank, Marcus, in 2016, and this year teamed up with Apple on its first credit card. JP Morgan rolled out Fin, its digital-only bank, in 2018, only to close it a year later.
I think if you look at the way big banks are structured, they're pretty well designed to serve the needs for the top, say, 25% of America, who have really large balances and they want to give credit products and investment services and so forth. But when you go below that and you talk to general mainstream everyday Americans, there's so much fee income that's generated by these banks.
But fees lead to profits, something that most challenger banks don't yet have. Building a profitable business is their next hurdle, and it's not easily done with checkings and savings accounts. Online-only banks also rely on established partner banks to hold customer deposits. That's an added cost. As challenger banks move into lending and other businesses, they're set to further disrupt the banking landscape. Question is, will the big banks catch up? Nightly Business Report, Deirdre Boza, San Francisco.
Coming up, Porsche goes electric.
How much power does Porsche's Taycan have? Well, it goes 0 to 60 in 2.6 seconds. And believe me, you feel it. Whoop! There we go.
Here are some of the stories in the news that we're keeping an eye on. Hurricane Dorian is a Category 2 storm off the coast of Florida and is expected to move dangerously close to Georgia and the Carolinas over the next 2 days. And in the northern Bahamas, where Dorian sat for the better part of 2 days, pictures are emerging of entire neighborhoods underwater, including many airport runways, thus hampering the relief efforts. In Hong Kong, Chief Executive Carrie Lam announced the government will formally withdraw the extradition bill that had sparked months of protests. But she also said the government would not accept other demands, so it is unclear if just pulling the bill at this point will be enough to appease the protesters. And in Iran, President Rouhani said starting Friday, it will begin working on centrifuges to speed up enriching uranium as part of scaling back its nuclear commitments. Iran continues to ratchet up the pressure ahead of a weekend nuclear deadline for European nations to come up with a solution for Iran to sell its oil abroad.
Elsewhere, the National Transportation Safety Board said today that driver error and Tesla's autopilot design were the probable cause of a Model S crashing into a parked fire truck on a California highway back in January of 2018. The safety board, which criticized Tesla's autopilot after a fatal 2016 crash in Florida, said the system's design permitted the California driver to disengage from the driving task before crashing earlier this week. And earlier this week, the NTSB said that the autopilot system allowed the driver to keep his hands off the wheel for the majority of the nearly 14 minutes of that trip. The NTSB is looking into 2 other fatal crashes involving autopilot use.
And 7 years after it rolled out its Model S, Tesla remains the leader in electric vehicles in the U.S., selling nearly 2/3 of all EVs since 2015. But now a new luxury car may be the first true threat to Tesla's dominance. Phil LeBeau has more from Niagara Falls.
In front of a spectacular backdrop, Porsche is hoping its first all-electric car will make a splash.
We wanted to show what we can do, that sustainability doesn't mean sacrifice.
With simultaneous reveals in Germany and China, Porsche is sending a message. This is not just another car. Going 0 to 60 in 2.6 seconds,
Woohoo!
the Taycan is designed to handle and perform like a true luxury sports car, as we experienced firsthand during a test ride.
Oh, it's got the power.
The bigger question, will the Taycan win over EV buyers loyal to Tesla and its first mass-market car, the Model S?
I would say that the Taycan is a big threat to the Model S. If you look at the way it's going to look, it's a Porsche, it's probably going to look great. The performance is probably going to be fantastic. And the Model S is old. It was a great design, but it's pretty long in tooth at this point. And they're a consumer base that wants to buy the latest and greatest.
The Taycan isn't cheap, starting at $150,000. A pricey ride Porsche executives believe buyers will want.
Personally, I can tell you that the car is overwhelming. Driving it is more than what I asked for. Now let's see what consumers say about it.
The Taycan goes on sale later this year, marking the start of the EV era at Porsche. Phil LeBeau, Nightly Business Report, Niagara Falls, Ontario.
And before we go, a final look at the day on Wall Street. Yesterday's declines became today's gains, with the Dow up 237 points. NASDAQ climbed 102. The S&P added 31.
That's it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. We'll see you tomorrow.